Bitcoiners, surprise, surprise, surprise. Midnight Talk releases around midnight my time. Welcome, welcome, yes. Welcome, Bitcoiners. Welcome to discount, Bitcoin discount day. Yeah. I hope you guys are all doing well. Let's talk a little bit. I hope you guys are doing well. Let's go. Good evening. Good evening, Diego. Cal says, you guessed it. I'm Mr. 100. Yeah, who is that person? Who is that entity? It really doesn't matter at the end of the day, but wow. Someone has been accumulating Bitcoin since November at the clip of 100 or more per day. And on some days, accumulating more than the actual Bitcoin mined per day. The race is on, guys. The race is on. The cat is out of the bag. This is only going to become more and more fierce. The battle for this diminishing supply of Bitcoin. And the more that the spot Bitcoin ETFs accumulate, the more pressure is applied to everyone else in the world who understands, who's starting to understand what's going on, to actually get their share of Bitcoin that can't be taken or absorbed by these seeming institutional black holes. And the people that know, the entities that know, the nation states that know, the family offices that know, and some of these, most of them know that there is a behind the scenes race to secure what is increasingly becoming scarce and what potentially will stand as the only safety net in a very precarious world right now. And I believe that more and more people by the hour, more and more entities, more and more nation states by the hour, by the day, by the week, by the month, are starting to really, truly understand what's really going on behind the scenes. Because as I've spoken to you before, I've spoken about this before, that the ecosystem, the institutional ecosystem now that is grabbing for Bitcoin, in my opinion, will not let much of that Bitcoin be released again into the open wild, for lack of a better phrase. And guys, excuse the glasses. It's pretty dark in here, so I'm using lights, and I will have a migraine for 4 or 5 hours if I stare into these lights. So even though I'm indoors, I really have to protect my eyes against the glare of the light. So hope that doesn't bother you. For some reason, sometimes that bothers people, but old trading thing from looking at screens my whole life. My eyes are sensitive to bright light. So to protect myself from having hours of migraines, I have to do this. But I think that there's a growing understanding that the institutional black hole that is sucking Bitcoin into its ecosystem, I believe that these institutions will not allow this diminishing asset to go back into the wild, to leave their ecosystems. And what I believe that many of these ETFs will do, especially like the BlackRocks and the Fidelities of the world, when they're compelled to sell because you as shareholders of the ETF, want to let go of the Bitcoin, they have a fiduciary responsibility to take the Bitcoin out of the ETF, to make the Bitcoin disappear. So you sell your shares and they have one day to make the corresponding Bitcoin disappear, right? But disappear where? Back to you? Back into the wild for the Oliver Velez's of the world to take and never let go? It's not going to happen. To put themselves in the position in the future of having to scramble at these obscene prices in the future to get the Bitcoin back, I just don't think that's going to happen. I think they're smarter than that. So their APs that are responsible for taking the Bitcoin out of the ETF, they'll sell it to their other ETFs. I believe that we haven't even begun where other ETFs that have nothing to do with Bitcoin change their charters to be able to have a 2% allocation to Bitcoin, 3% allocation to Bitcoin. So let me give you an example of this. Let's say there's an ETF that focuses on energy stocks, and their purpose, their charters, the very creation of this ETF was specifically designed to be a play on energy stocks. Well, if they change their charter to be able to allow a 2 or 3% allocation to another asset such as Bitcoin, then all of a sudden, all of the existing ETFs that do this become buyers of Bitcoin as well. And so we've entered into, in my opinion, a completely different era for Bitcoin, where there is going to be a constant, a perpetual institutional bid, demand, buy, a buy price that will never go away, never go away. And they will use these small dips like we're experiencing. And guys, this by all means this is a dip for ants that we're experiencing. We're down less than 5%. This is nothing for Bitcoin. And so I wanted to come on very quickly. And I don't know if anyone's experiencing any type of fear, and you shouldn't. You should be experiencing glee as far as I'm concerned. But throughout, I wanted to come on to basically explain what I consider to be, and what I explain to my traders as the 10x factor, okay? And I didn't complete the title, actually. It's the 10x factor of Bitcoin's halving. All right. So most of you should be aware of the fact that every 4 years, the issuance of new Bitcoin that comes into the world is cut in half. And this is very unique for the world. The world has never had an asset that actually goes the other way. Most assets increase in supply over time. Even gold will perpetually increase in supply forever, because gold is infinite. It is not finite. So Bitcoin is unique in the sense that its issuance goes the other way. All assets have the capability of expanding the supply. No asset that has ever been available to the human species goes the other way. So its issuance declines as well as its supply declines. Bitcoin is unique in the sense that it is the only asset that human beings have ever come in contact with that also is finite. I think it's important to understand that these are not just words that you throw around, that there are deep meanings behind the fact that Bitcoin is finite, right? Finite means that we know in advance there's an absolute finite number. There's no more after a certain amount. And We've never had that before. And because of that misunderstanding, Bitcoin even today is very, very mispriced. It's very inexpensive compared to what its true value should be. And because we've never been in contact with something that is literally finite, meaning that there's an end to it, the same way your life is finite. You may not know when your last breath is taken, but it's finite. All right. Bitcoin is finite. There is nothing that is finite except Bitcoin in the entire existence of the world. And nothing has ever been finite or provably known as finite. Let's put it that way. And so there's never been an asset that goes the other way, meaning its issuance gets cut in half every 4 years. So its issuance gets less and less and less. Never in the history of the world. Never in the history of the world has something been finite and known in advance what the finite number is. And it's so unknown that it makes Bitcoin unfairly priced. So some people sort of just look at the numerical number that Bitcoin is trading now at 67,000, 68,000. And they just from a numerical point of view, they say that's expensive. That's a very ignorant view of value. You can't value something by the numerical number placed on its individual unit. All right. So I believe that Bitcoin is greatly underpriced because its finiteness is misunderstood and underappreciated, and the fact that its issuance gets cut every 4 years. We've never been exposed to anything like this. There are a growing number of people and entities and nation states and things of that nature starting to understand this more and more. And the race is on, guys. The race is to take this and to really not let it go again. The ETFs do not want to let this go again just because Joe from Kentucky wants to sell his ETF shares. Just because you want to sell your ETF shares, they're not going to say, oh, well, I guess we have to let this rare, increasingly rare asset that is on its way to becoming the most valuable asset in the world, I guess we have to let it go back into the world. No, I just don't think that is going to happen. So I think that what gets sucked into these ETFs stay in that ecosystem. They'll slosh it around from entity to entity, ETF to ETF, offshore firm to this, to that, but they're not going to let it go back out into the world outside of their ecosystem where they will have to bite, scratch, battle, and fight for it again in the future. And so, Bitcoin has entered into the second phase of its existence, as far as I'm concerned. So let's talk about what I mean by Bitcoin's 10x factor. And these are things that I normally don't publicly talk about, but my time is limited here, so I'll share some of these things that I consider to be extraordinarily valuable. That normally is exclusively for my guys. But let's talk about this. I want you to understand that over the past 15 years, Bitcoin has had 3 complete halvings. This April will be the 4th halving that it has, where its issuance gets cut in half. Now, we don't have a lot of data points. I admit that. We've got only 3, and this upcoming one will be 4. But listen to this. There has never been a halving, 3 of them, where Bitcoin has not 10x'd, more or less. I want you from the price of the halving. So last halving was a little bit less, but let's round, okay? Allow me to round, okay? So think about this. 10x minimum, in most cases more than 10x. But let's just take 10x as the standard. So we're taking the most conservative number and using that as our basis, right? From the halving price, Bitcoin has 10x or more on average. So I want you to think about what this does. Now, it's done this in less than 2 years, a year and a half. So from the halving price, right, which is coming up in April 21st, April 20th, and that whatever the price is, according to history, according to what has always happened, you get a 10x in less than 2 years. So we are now at 68,000. Let's take 67,000. What if by April 21st, when the halving occurs, Bitcoin's at 67? And let's say we take what it's always done at a minimum, 10x, and we 10x 67,000. What's that? 670,000 per Bitcoin. I know, and I'm always reminding you this, I know people say, yeah, but Oliver, the past is no guarantee of the future. Past results, past performance is no guarantee of future performance. We know that. But as I'm always reminding you, it's the only thing we have as a gauge to project probabilities into the future. So do you not use what we had? Do you not use the past? Of course, we have to use the past to come up with some framework. So what if Bitcoin dropped to 50,000 by the halving? What's a 10x from 50,000? 500,000 in less than 2 years, in a year and a half? Are you kidding me? My point is that if we just go by what Bitcoin has always done without spot Bitcoin ETFs, if we go back and just use as a basis for projecting probabilities into the future, if we go back to see what has Bitcoin done every single time without spot Bitcoin ETFs, without FASB rule adjustments to allow it to be more easily accounted for on the balance sheets of organizations, corporations, publicly traded companies, without regulatory clarity. Do you understand? You see what I'm saying? It's done 10x from the halving price or more every single time without these things. Now add these things: the regulatory clarity, Bitcoin wrapped in a registered security wrapper called the spot Bitcoin ETFs, where anybody now can press a button, or soon we'll be able to press a button no matter what platform they're on. FASB rule changes. Wow. Is it possible that if Bitcoin 10x'd always, minimum, from its halving price without these things, that it's possible for more than a 10x, way more than a 10x with these things? My point is that if history's any guide, and it is, right? It is a guide. If history's any guide, guys, all right, then if history's any guide, these prices today don't matter. What is my message? Stop worrying about what price you get. Stop it. Stop trying to time it. Stop trying to be like, wait a minute, I'm going to hold off and see if I can get cheaper. It won't matter if history's if history's a guide, and it is. If history's any guide, it doesn't matter whether you get Bitcoin at 71, 72, 74, 61, 62. We are 10xing if history's any guide, or more, probably more, because of all the things that Bitcoin never had. It's in its second phase. We're 10xing minimum from wherever that price is. It could freaking go to 30,000. 10x from 30,000 is 300 at a minimum. And based on the things that we have, it's probably going to be more than 10x. So when I see days like this and Bitcoin's down 4%, whoo, like that's something for Bitcoin, right? It's a pit stop for Bitcoin. You know, I see all of this attempts. Well, maybe I should wait and time. It doesn't matter. These prices don't matter. I've tried to read virtually every single forum post back in the old days regarding the Bitcoin. And I've witnessed, I've not witnessed, but I've read the same comments coming from the same mindset all the way back in 2010, 2011, 2012, 2013. I think Bitcoin is high here at, $100. I'm going to wait for it to pull back to maybe $60. Do you know how silly this sounds today? It's the same thing that people in 2032 are going to be saying about you. They're going to come back and read your comments waiting for Bitcoin to drop to 30,000 or 40,000 or 50,000. And they're going to be like, how ridiculous was that? Right? We're still that early where anything that you consider to be an entry price today you will be considered as being fortunate and lucky and too stupid to understand what you had, worrying about what's my entry price. All right. And so it's fun to be able to say, yeah, I grabbed the bottom. I do that, but I do it more as fun. And I show a small buy every now and then. Do you know why? To motivate you, to stop you from being scared. Oh, Oliver just bought. But not that I'm really trying to time, because I buy every single day. I'm not trying to time anything. I know I have come back. Let's put it this way, right? I have come back from 2033. That's the year I always pick. I've come back from 2033 to try to pound the table and let you know we're still early. Stop freaking obsessing about the price now. No one is going to care. You're not going to care in 2033. Now, you're not going to care in 2025. You probably won't care in a few months from now. You're certainly not going to care at the end of 2024. No one's going to care with you bragging, yeah, I grabbed Bitcoin at 61 versus 63. No one is going to pay attention to that. It's not going to be important. And at the end of 2024, at the end of 2025, and certainly not at the end of 2033. Do you understand what I'm saying? You've got to step back, right? You've got to step back and look at this thing. You got to be Benjamin Button, right? Live backwards from the year 2033, when potentially we're millions of dollars a coin, $1.2 million and beyond, or whatever. Look, and I think that's conservative, but look back from that point Nobody's going to care whether you bought it in the 40s or the 30s or the 50s or the 60s or the 70s or the 80s or even the low 100s. Nobody's going to care. We're only just beginning. All right. So I want you to keep in mind this 10x factor. I want you to keep this historical thing in mind. And remember what I mentioned the other day when I broached this topic, that Bitcoin has at a minimum 10x, more or less, from its halving price every single time, is that if you want really conservative numbers, you cut that projection in half twice. So let's say Bitcoin is at 60,000 by the halving. All right. It could be much higher, could be lower, but let's just pick 60,000. A 10x from 60,000, that's using the minimum number, because 10x was minimum without all the things that we talked about. Minimum 10x or more. So we're using conservative numbers here. So, okay, we 10x with all of these things, 66 from 60,000 to 600,000. If you want to be really conservative with your projections, cut it in half twice, not once, twice. So 60,000, 600,000, cut it in half is 300,000, cut 300,000 in half again, that's 150. Who cares, even at the most conservative number that you can ever come up with? Who cares if you bought at 61 or 62 or 63 and you're at 150? Doesn't matter. Now, when you cut that number in half, it's close to a guarantee. If you cut it in half twice, which is what we just did, it's like a bunt in baseball. Bitcoin's never 5x'd from its halving price. That's already, when you cut it in half once, that's already almost in the bag. It's never done that. But it's certainly never done less than that. So when you cut it in half twice, it's almost like bunting. It's like Bitcoin is, you can bunt Bitcoin there. And you can't tell me that all of this demand that Bitcoin never had is not going to produce that. Bitcoin has never had demand. Do you understand? Not like this. It's always had the supply side to work with. Do you understand what I'm saying? It's always had having its supply, its not supply, but its issuance, which does affect supply. So the funnel of supply gets cut in half. It's only had that one side, like Bitcoin's been hopping on one leg and hopping on, because markets have two legs, right? There's supply and demand. Bitcoin's never really had demand. Bitcoin has only had one leg to work off of. It's like one arm, one leg, arm tied behind his back, one leg tied behind its back, can't hit the ground. And Bitcoin's had to hop on one leg. In hopping on one leg, it became the best performing asset the world has ever known. Now it has put its second leg down, second phase. It's got both legs to work with. It gets the flow of supply gets cut in half, and we now have constant demand that will never go away, constant institutional bid. Now, some people might say, Oliver, how can you say that for the first 15 years, Bitcoin didn't have demand? All right. Fair question. How can you say half of 1% of the world is demand? How can we label that demand? Bitcoin is held by half of 1% of every single human being on earth. How is that freaking demand? That's not demand. Do you understand what I'm saying? How can that be demand? A global asset has has half of 1%. That's not freaking demand. It's never had demand. It's only had its ability to cut the flow of supply in half. And just with that one leg, it's become the best performing asset on planet Earth. And now it has that end demand. You don't see these ETF numbers? So the best is in front of Bitcoin, not behind it. People say, well, Oliver, we're at higher prices, so you can't say that Bitcoin's going to 10x from now. That's bullshit. We never had demand. It's going to more than that. We've never had the other leg. The other way of determining whether or not the first 15 years had demand, just ask anybody in your family. Who in your family has Bitcoin? Nobody. That's demand. Who amongst your friends has Bitcoin? None of them, right? That's demand. Neighbors, none of them, right? That's demand. Your church, nobody in your church groups. That's demand. Bitcoin's never had demand until now. And it's just starting demand. Demand will grow for 20 years. That's how demand works. Demand will grow for 20 years. It's not going to go down. It's going to go up for 20 years. So if you think this is something as far as demand is concerned, this is not going to slow. You don't slow from half of 1%. You only increase. This is just adoption law. You don't slow from here. You only increase. And the most exponential rise in an adoption phase is in the middle. We're in the beginning. Half of 1% is not the middle. Half of 1% of the world is not the middle. That's not even the warm up. Do you understand? That's not even the warm up. So I just want you to put this in perspective. And for some of you who have not gone deep enough down the rabbit hole to acquire your true conviction, these little vacillations in the USD denominated price of Bitcoin can be unsettling. But in reality, they should be viewed as gifts, because if Bitcoin is going to 10x or more from whatever price it is on April 21st, the day after the moment Bitcoin experiences its halving, right? If it's going to 10x minimum from there, then any down before that 10x is a freaking gift. It's like someone on a silver tray walking to you with jewels, precious jewels on it. This is for you. All down is good. All red, guys. Red days, red hours, they're good. And it doesn't matter if Bitcoin drops further from where you decide to get in. It's fine. The idea is not to miss out because you're simply waiting because these prices don't matter. So keep this 10x factor in mind. I don't want you to let it go. And it will keep you anchored in calm reality. All right. It'll keep your fears in check and help you stay true to the idea that down is good right now, because we're going to 10x from wherever we are on April 21st. So down is good. This is early, and it is. All right. Let me take some questions from you. All right. See what you got for me here. Hi from Australia. Yes. Awesome. Says the surpassing of gold. I like that name. I like that name. Yeah, the surpassing of gold. Do you know that talking about surpassing gold, we have to get past the $700,000 per Bitcoin number. But if Bitcoin settles 70,000 by the halving or 80,000 by the halving, it's surpassing gold based on those historical numbers this cycle. What do I mean by this cycle? By the end of 2025. That's this cycle. That is insane. That means that Bitcoin becomes the most valuable asset on planet Earth. And the world is still short the upside. You know, I'm not quite sure how many of you understand what that term means. I throw it around a lot, and I always I forget that a lot of people aren't in the professional financial realm. But this is commonly used in my industry, short the upside. So there are two types of being short, right? There's when you take a financial short, you bet on the price down. Every short seller must buy to close the position. So every short is a buyer. And this is why short sellers do ultimately help the asset, because every open short is a future buy. That's future demand. So when you see a pile up of short sellers, that's positive a little ways out, because all of them have to buy to close the position. So that buy is demand. The future closing of their position is buy demand. All right. So when you open a short position, you sell first, but your next act must be to buy. So that buy is bullish. The future buy demand is demand. That future demand is bullish for the underlying asset. That's a financial short. But short the upside means people who don't have a position, but at some point in the future, they have to buy anyway. The vast majority of the world has to buy Bitcoin. It is not going to be a choice. They're going to have to buy it. When the spot Bitcoin ETFs came into existence, do you know how many people on Wall Street just now they have to buy? Even if they don't even like Bitcoin, they have to now. My boss says we need to have a 2% allocation now that the spot Bitcoin ETFs are approved. We have to have a 2% allocation to Bitcoin in the fund now. They have to do that. That is short the upside when you have to buy. Just like a short seller has to buy to close the position, when you're just like a short position has to buy to close the position, short the upside is I got to buy because my boss said I got to buy, or I have to buy because this is now the most valuable asset on planet Earth. I've got to buy it. How do you not have some allocation to the most valuable thing on planet Earth? You can't. You can't not, or you get fired. How do you not have some allocation to the best performing asset on planet Earth now that it has regulatory clarity, spot Bitcoin ETFs, and the like? You have to. And all of these registered investment advisors who have no interest in Bitcoin, they're going to now have to have an interest in Bitcoin, because the knocks on their door by their clients, what are we doing with Bitcoin? What kind of allocation should we do with Bitcoin? They're going to have to. That's being short the upside. The world is short the upside. Nation states are still short the upside. When Bitcoin becomes more valuable than the thing they use as self-sovereign store of wealth, which is gold right now, they use gold as a way to gain credence, credibility in the world. A country's credibility is based on its self-sovereign wealth. Its currency, the strength of its currency is backed by how much gold does that country have? Well, when Bitcoin becomes more valuable than the thing they use for that, they're going to have to allocate to Bitcoin. And here's the thing. The world will be able to verify it. We can't really verify how much gold the United States has. We can't really verify how much gold Russia has, or North Korea, or anybody for that matter. It can't really be verified. That's not the case with Bitcoin. You and I will be able to verify that shit. And so this is massive future ongoing demand. As the price goes higher, Bitcoin will have to be bought, even by the naysayers, even if they hate it, even if they don't like it, even if they don't believe it, they're going to have to buy it. The higher it goes in price. Other assets don't experience that. A lot of times, the higher something goes in price, the more it's backed off. But Bitcoin is not that way because of its disappearing nature. So the higher it goes in price and the more it's disappearing, the more you better run to it before it disappears on you more and goes up higher. Also, what other assets don't enjoy that Bitcoin does is the Veblen effect. So Bitcoin is what is called a Veblen good, which means that there is an uplift in your status. You've experienced this the more you have. Veblen goods are when people feel proud of having an expensive thing. That's a Veblen good. Louis Vuitton purses are, or luggage, that's a Veblen good. All right. You're in an airport, you see someone with 8 different pieces of Louis Vuitton luggage. That's a Veblen good. You look, right? Bitcoin is a Veblen good. You guys have experienced the Veblen aspect of Bitcoin. I've got 2 Bitcoin. You know, there's pride attached to that. This is an aspect of Bitcoin that a lot of other assets don't really have that Veblen aspect to it. You will be regarded higher in society the more Bitcoin you have. That's what makes it a Veblen good. All right. And so these things are all just going to explode the demand, the desire for Bitcoin as it's becoming more and more scarce. Okay. Now, there are some people who argue the scarcity of Bitcoin because of its divisibility. They assume that they say that because Bitcoin is divided into Satoshis, which is one Bitcoin is really 100 million Satoshis, and that the total supply is, I forget the number, but it's super big. How can that be scarce? Because there's so many of these things. And this is the wrong way to view scarcity, because what these people are doing is they're confusing availability with scarcity. It is possible for something to be available and scarce at the same time. So let me give you an example. There's 50 people at a party, but there's only one pizza. Okay. The pizza is scarce. One pizza for 50 people at a party, that's scarce. But I split the pizza into 1,000 little tiny pieces, 1,000 little tiny pieces. Like that. I've got my little share, whatever. Do you understand? So now every person has a few pieces of pizza, but it doesn't make the pizza less scarce. Just because I split the pizza into these tiny, almost insignificant pieces, it's available to everyone in the party. Pizza's available, but does it make one pizza more plentiful? Does it change the nature of that pizza's plentifulness? No. The pizza is still scarce for 50 people. One pizza is still scarce. No matter how small you slice these little tiny dices, it's still freaking scarce. It's available to everybody at the party. So, but it's scarce. So people confuse availability with scarcity, and that is a mistake. That's a mistake. All right. Let's see here. James Trasher. If we don't self-custody, is it inevitable? Is it inevitably going to be confiscated or just a precaution? I think it's safe to assume that because of the historical precedent that's been set by the human race, that there is nothing more important than self-custody. Human history is filled with the story of confiscation. Am I right? It's a story as old as time. Theft, confiscation. Because Bitcoin does not belong to the physical realm, it has left the realm where confiscation is really possible. And therein lies one of its real special qualities, that it's moved value and wealth to a realm that can't be touched by another man. You see, we've lived a period during the human evolutionary cycle where everything that a human had of value could be confiscated because it was physical. We are now moving to a different realm. The entire human race is moving to live somewhere else. Do you know where that new frontier is? It's the digital frontier. It's the new world. Our lives are being moved to this new world. In this new world, your value, if you self-custody it, can't be touched by another man. And so it's important to understand that we are in this amazing transitional phase for the human race. Our lives are leaving the physical realm for the digital realm. And if you think about it, think about this. All of your photos used to be in an album, physical. You could touch it, you could open up the album, look at the pictures. My mom used to bore neighbors every single time they came over for coffee. Did you see when Oliver had his first baseball? Did you see when Oliver had his first baseball? Let me see. And they would say, Mrs. Velez, we saw that like 217 times. But I don't think you saw this one. She used to freaking bore the neighbors. I used to say, Ma, please stop it. Stop it. 14 albums under the coffee table, broke them out every single time. My baby pictures, right? 14 albums, maybe 500 pictures. Do you know I have 50,000 photos here? I've never touched them. I've never felt them physically, but they give me just as much joy. And I show them too sometimes. Do you understand what I'm saying? Our photos have been sucked into the new world. Our whole lives are being sucked there. Our movies are there. When's the last time you've held a movie in your hand? Some of you have never held a movie in your hand. Some of you have never held a physical photo in your hand, ever. Your music is there already. Your movies are there. Your mail is there. When's the last time you've licked the back of a freaking envelope? Remember how disgusting those things are? Oh, wait a minute. Do I have the proper amount of stamps to put on my envelope? When's the last time you've done that? Your mail is digital now, right? Your photos, your music, your mail. Some of you have friendships digitally by people you've never physically met. You speak to them every single day. Your friendships are digital and becoming increasingly more so. We're moving, our lives are being sucked into the new frontier. And in that world, value is Bitcoin, which can't be touched by another human being, which means that it can't be stolen and can't be confiscated. So for the first time in the human race, another man can't take from you. But if you let another man hold even that digital value for you and give you bells and whistles to trick you into saying, let me hold it. I'll take care of it for you. I've got it. Take this instead. Take the ability to borrow against it. I'll hold it. You can borrow against it. Take a little bit of interest on it. I'll give you some little pennies on it, but just let me hold it. I'll let you post it as collateral, but I'll hold it. You can post it. All of these bells and whistles to trick you into you not having possession of the real thing that makes you valuable. You can't fall for that. I'm not saying that you can't use some of that. But let's learn from history that if you don't have it yourself, it's really not yours. Russia learned that, right? Venezuela learned that they had their gold in London in a vault. I had gold in London in a vault, just like the country of Venezuela had gold in a vault, and they never got it back. When the powers that be said, we don't like what Venezuela's doing, cozying up to Russia, whatever, we're not giving them their gold back. They learned that, shoot, we didn't self-custody our golds. They have it. We're never going to get it back. Russia learned that if I don't, what they didn't self-custody, they're lost. Do you understand? History is filled with you either self-custody it and really have it, or you have it in name only until I say you don't have it. So are we going to keep making the same mistake over and over again? Or are we going to frickin' finally learn? Own it yourself. Take frickin' responsibility. But Oliver, I'm scared. I'm scared I'll lose it. Well, frickin' grow up. All right? You're scared when you go purchase a car and they hand you the keys. You're like, wait a minute. I'm scared. I'm scared I'll lose the keys to my car. Have some freaking responsibility. You buy a house and the real estate agent says, congratulations, here's the keys to your new house. But I'm scared. I'm scared of holding my own keys to my own house. Can you hold it for me? Like, come on. All right, it's time to frickin' grow up. It's time to take full responsibility for your value, what you work for, your wealth, your future, your family's legacy. Why should another man have their hands wrapped around that? Why should you have to seek permission to do what you want with what you have? Oh, well, we're closed on the weekends. You can't have access to that. But it's mine. Doesn't We're closed. We say you can't have access to what's supposedly yours on the weekend. We're closed. I want to withdraw $500 a day. You can't withdraw more than that. But it's my money. We don't care. That's our rules. What's the most prevalent law throughout the world? Possession. Possession is 9/10 of the law all over planet Earth. It is not rights, it's possession that's 9/10 of the law. 9/10, do you know that's almost 100%? 9/10 of the law is possession, which means that you might have rights to something, but the person who possesses it has 9/10 of the law backing them up. Ask the people who had their assets held by Celsius whether 9/10 of the law is real. Or FTX. Or Mt. Gox. Or whatever. The possessor has 9/10 of the law backing him up. Possess your wealth. You want a little piece in the hands of another man for the bells and whistles? Fine. But have your own keys. Have the keys to your own freaking house. Have the keys to your own freaking car. Have the keys to your own freaking Bitcoin, which is on its way to being the most valuable asset on planet Earth. Do you understand what I'm saying? Are you picking up what I'm laying down? Tell me. Somebody say yes. Somebody say amen. All right. All right. What do I think about Bitcoin power law? There's been a lot of talk about this. It's gaining a lot of momentum. And what I find quite hilarious about these things is that, you know, the promoters of these various narratives, and they all have a value, they become competitive against any other narrative that doesn't jive with that narrative. So, you know, the power law is now stepping all over the stock to flow model or whatever. I just find it quite hilarious because at the end of the day, they're all just frameworks, right? And this thing is so different that there's no way to really wrap a narrative around it in truth. Now, it doesn't mean we shouldn't try to come up with some framework. That's what we did here tonight, right? With the 10X factor. So, you know, I appreciate these things like the power law and even stock to flow, which a lot of people have trashed on. But I think they all have some value. But we have to also understand that it's just man's attempt to frame something, right? That doesn't necessarily mean that that's gonna happen. But having a framework sometimes can be better than not. So what are my general feelings about the power law? I think it's cool. Remember, it's based on the first phase. So it's based on Bitcoin's first phase, which I believe that we've left. So it's based on something that I think is almost already broken. And one of the issues that I have with the power law is that it does incorporate the concept of diminishing returns, which I think is wrong. And I've spoken about that. And so I believe that the power law, as solid as it has mapped out the past, will be broken to the upside. And so it's going to be, in my opinion, negated to the upside. So when you look at that power law channel, for those of you who are familiar with it, I think Bitcoin breaks that power law channel and then you have to redraw it, right? I just think that because it's based on this concept of diminishing returns over the years, because that's seemingly what Bitcoin has done over the last few cycles. We've talked about that. That's just part of that little S that then swooshes back to the upside. I just think it's broken in time. It's interesting to look at, and it's interesting to have as one of a variety of different frameworks to give you a general idea of what's possible. All right. Yeah, I agree with that. Power laws math, and it can help you frame a possibility, but it can never quantify supply, demand, yes, human behavior, adoption, um, the rate of adoption and things of that nature. All right. I appreciate that. That's right. Amen. Yeah. Yeah. All right. What else here, guys? What else you got for me here? OV, as per your opinion, which is one level higher in returns in this bull run? MicroStrategy, MSTR, or mining stocks? I'll take a stab at this question, but it always concerns me because I just want you to understand that nothing else is Bitcoin. And so you have to be careful about what you're after. You should be after freedom. You should be after self-sovereignty. You should be after the exit, the escape from a failing system. That can only be Bitcoin. All of these things, mining stocks, even MicroStrategy, they're in the system. They're just another way to gain more of the system. Bitcoin is the escape, is your protection from the failing system. All you need to do is look at everything else that is failing at a faster rate, right? So Turkey's failing at a faster rate. Argentina's failing at a faster rate. Everything is almost failing at a faster rate than the United States, but the United States is also failing as well. The US dollar, all fiat currencies are failing against Bitcoin. The only safety against that is Bitcoin. Now, all of these other things have an exit, but their exit is more dollars. So it's more of the sinking ship. That can be fine if you're going to quickly switch that to Bitcoin. But I want you to understand that these things that even have the potential to outperform your freedom, they're no replacement for freedom itself. Okay? We're not after dollars, we're after freedom. We're after self-sovereignty, and that can only be had by Bitcoin. Now, with that being said, MicroStrategy statistically, from what I've seen and looked at so far, MicroStrategy and the mining stocks in particular, they have during periods of time the ability to outperform the price of Bitcoin by a factor of 3 to 5. Okay, so depending upon where you are in Bitcoin's 4-year cycle, they do have the potential to 3x the Bitcoin price, to 5x the Bitcoin price. But mining stocks in particular are cyclical plays. In my opinion, they're not the long-term play. They're better used as cyclical plays. And traditionally, all mining stocks, whether it be mining stocks for gold or silver or copper, whatever, they have traditionally been cyclical plays. You don't hold them for real long periods of time. You play them in the most bullish part of the underlying asset cycle. And so mining stocks tend to have weakness into the halving. And several months later, let's say the halving's in April. So let's say starting August, September part of the year, they start to really heat up again. That's been the historical norm, right? And so a lot of people are thrown by the fact that, but the Bitcoin miners, they're weak. They started to have some serious weakness, but that's typical. their pay is going to be cut in half by the halving. And the market needs to see a few months after the halving to find out which miners are still stable, even though the reward got cut in half, which ones are still in good health, which ones still seem to be rocking. And then when Bitcoin's price starts moving in its most exponential part of the cycle, the miners take off and outperform Bitcoin. So miners are to be used to add extra juice to your overall Bitcoin strategy in a cyclical way. And why are they not really ideal for longer term holds? Because the knife cuts both ways. In Bitcoin's weaker periods during its cycle, the miners will be weaker by an order of magnitude more than Bitcoin. So you don't want to have that. It's already difficult enough to hold on to Bitcoin during its bear market. You're going to hold on to something that's even more bearish than that. So it requires more skill to step into the miners at the right time and to get out of the miners at the right time. But it's a cyclical play. MicroStrategy is a little bit different in that it doesn't have a sell Bitcoin side of it. Whereas that the miners do. The miners get rid of 80% of the Bitcoin that they mine. Whereas that MicroStrategy is a constant and perpetual accumulator of Bitcoin. So everything's going to come down to you have to be able to read premiums with MicroStrategy. So if the historical norm for MicroStrategy having too much of a premium, that's hands off. And when its historical norm for it's on the lower end of its premium range, that's a good buy range. These things require a higher degree of sophistication, which Bitcoin doesn't need. Bitcoin has brought simplicity to the game of wealth. All right? The simplicity has been taken away from us. And it has been convoluted. Wealth has been convoluted for the average person. The simplicity regarding keep increasing the value of your life and improving your future, the simplicity behind that has been taken away. You used to be able to save to improve your future. Now, what did Michael Saylor say the other day on television? The person who saves in dollars, we have a word for them. They're called poor. That used to not be the case. So that's been taken from us. The simplicity of simply saving to improve my future was robbed from us. So Bitcoin's brought that back. You don't have to be sophisticated enough to find the right premium levels for MicroStrategy and the right cycle for the miners. And you don't have to be a freaking hedge fund manager anymore. You can simply sock away in Bitcoin and know that 4 years from my purchase price today, I will be wealthier, probably by a lot. Every single buy you make in Bitcoin, you can say, 4 years from this date, I will be wealthier than I am today because of this buy. And I don't believe that will ever fail you your entire lifetimes. I could be wrong, but I don't think so. I think Bitcoin's going to increase in value every 4 years of its life for the rest of your life and for the lives of your children. It's baked into the code. It's math. If demand is going to increase over the next 20 years and the issuance is going to be cut in half every 4 years over the next 20 years, over the next 100 years, then it's just a mathematical formula. The value goes up every 4 years of your life. We don't have anything that's accessible to us that offers that level of certainty. For the first time, it's as simple as that. Buy and wait. For the first time, you don't have to be an expert. You know, it's very, very, very powerful. Very, very powerful. Um, let's see here. Mm. Let me put this here. I use MicroStrategy to buy more Bitcoin. Yes, that can be done. I've done that. But again, you have added risk with that. I'm not saying not to do it. If you do it well, congratulations. But you can mess up and wind up with less Bitcoin because MicroStrategy will fall. If you get it wrong, it will fall way harder than Bitcoin falls. Do you understand? So you have to get that right. And so that adds a layer of complexity to your Bitcoin overall wealth accumulation strategy that you don't have with Bitcoin. So you just, you're upping the complexity level. That's all I'm saying. And you're upping the risk profile. And Bitcoin is here to eliminate that. All right. At the end of the day, there is no risk with Bitcoin. And a lot of people can't wrap their minds around that because they're basing risk based on the US dollar's opinion of the value of Bitcoin. But Bitcoin doesn't have risk. The risk is in holding the fiat currency. That is the risk because that is guaranteed to lose value every second of your life. You get a paycheck, let's say, boom, you receive it in your account. From the moment you receive that, it starts losing value. The trick is that the number on the unit doesn't change. So if I were to show you a bill here that's a $100 bill, the $100 stays the same. That's the trick. The $100 that they print on the $100 bill stays static, but the number is declining every second. So it's becoming 99.9 cents, 99.8 cents, 99.7 cents. Do you follow what I'm saying? So it's losing value while the number stays 100, and that's the trick. And that's the risk. Bitcoin is not the risk because if you buy 1% of the network, your 1% never goes down, ever. So the risk is not in Bitcoin. The risk is in the fiat currency. And the wealthy have always understood this because what they've done is always have less dollars. They have negative dollars. The wealthy have negative dollars. You have surplus dollars. And so you get poorer. But the wealthy they have negative dollars. That's called debt. Debt is negative dollars, right? So they borrow the dollars today, which are, let's say, 100, and they quickly change that into something that is more steady than the dollar, like real estate, now Bitcoin. And so they're going to have to pay those dollars back. But because the dollar drops in value, they'll have to pay back less later. They're shorting the dollar and going long Bitcoin or going long real estate or going long the S&P 500, something that can't be printed at will and at whim. So they take the dollars, they borrow dollars from you, right? Because that's debt that we all pay for. They're borrowing dollars from us. Those dollars are created. The more dollars that are created via debt, the more our wealth drops, right? A lot of people don't understand how money works. Every loan drops your wealth. Every extra dollar of debt drops all of our value. So as you see the debt number going up, your wealth is going down. Where do you think it comes from? It comes from us. And so the only escape from that is Bitcoin. When you switch your dollars that are melting into Bitcoin, it stops melting instantly. Now, the dollar is going to trick you at certain points to say, look at your Bitcoin going down. Your Bitcoin's not going down. Your Bitcoin can't go down. You can't lose the percentage of the network that you own. You can't be debased. It doesn't go down. And from a US dollar perspective, it's practically mathematically guaranteed that that is going to even be worth more from a US dollar's perspective 4 years from now, minimum 4 years from now. Yeah, so just be careful with that. Thank you. I appreciate that. Thank you for all the education, boss. I've become a 13% center because of you and by studying Bitcoin more. Awesome. Yes. And let me just say this. A lot of people still ask me what does 13% means. Bitcoiners are still rare in the world. Remember, less than half of 1% of all human beings actually have Bitcoin. So being a Bitcoiner and owning Bitcoin, especially in a self-custody way, you're truly elite. You're truly special. You're exceedingly rare on Earth today. And I like that. But there's even something more rare than a holder of Bitcoin. There is the 13%er, because it has been said that only 13% of all Bitcoiners that own Bitcoin are 100% Bitcoin and nothing else, meaning that they're Bitcoin maximalist, or they're not, oh, I'm Bitcoin and I also like Ethereum and I also like Cardano. So only 13% of all Bitcoiners understand that it's only Bitcoin. Stop the bullshit. Stop the trying to trick me into the same system that I'm trying to escape. Another man controlling my future, controlling the supply, dumping on me when he wants to, printing more coins when he wants to. Oh, the foundation decides this. No, we're escaping that. All right, Bitcoin's the only thing that allows that escape. And so only 13% of all the people who have Bitcoin actually fully understand that. And that makes, if being a holder of Bitcoin makes you exceedingly rare, then being a 13%er makes you practically freaking non-existent. So we 13%ers at the freaking top of the pyramid, the ultimate top. All right. Don't you want to be the ultimate top? I do. I do. All right. All right. Out of Candyman, 30 Shevin says, what are they talking about? I'm not quite sure what you're asking about that. Thought you said, what am I talking about? I was about to tell you, I don't know. But yeah, the 13% doesn't refer to what you have. It refers to the percentage of those who understand that it's Bitcoin only. All right. I've lived this shitcoin movement too, guys, when before. It's not the first time that a shitcoin movement existed. When the internet became legalized in 1994, a lot of people don't realize that it wasn't legal to really use the internet from a personal and commercial way until 1994. As soon as it was made legal, I formed my company's first website. Anyway, the internet was this open protocol that no one could really control, but you could access. It was available to everyone, but you couldn't control it, right? Because it's an open protocol. Well, this became all the rage for a while. And then there was this secondary movement by certain organizations that says, well, we love the internet and we love the freedom and the openness and the availability and all of these benefits from the internet, but we want some degree of control over our version of the internet. Sound familiar? So we're going to create a better version of this open one that's available to everyone. We're going to create a different one called an intranet. And these companies that would start to announce this, we're announcing, we're putting out a press release, we're announcing that we're going to form our own intranet, and the stocks would freaking fly. They would double, triple overnight. Oh my God, here's another one. Another one would come on and says, we're now announcing that we're going to form our own version of the internet we're going to have our own intranet. It's going to do this and it's going to do that, but we're going to have control over it to do this. And it's going to focus specifically on this, not like the open internet that's just wide open, but we're going to focus our version of the internet over here. Sound familiar? Shitcoiners, right? And these companies that would announce their version in the late 90s of their version of the internet, and then they would change their name and put a .com on the back of it, announcing their intranet plans, and the stocks would just fly. I lived that period. When's the last time you heard the term intranet? Any of them exist today? Any of these companies have a .com on the back of their names today? Not really, right? Maybe 2, 3, 4, whatever. There were thousands of them. They're all gone. And I'm telling you, we are watching this same bullshit movement. Wait a minute, we're going to take the blockchain open protocol of the internet. We're going to take the blockchain, the open part of Bitcoin, and we're going to make a special one for this and that. We're going to point it over here, and it's going to specialize in this, and we're just going to do this or whatever. And these things it's the same story. History's repeating itself. They'll all be gone. I'm telling you, they're going to be gone. The companies that decided not to do that, to stake their claim in the open protocol that was available to every single human being on earth, the open protocol called the internet, the ones that decided to build their businesses on top of that became the world's first $1 trillion companies. Amazon, all right? Even Apple pivoted there. Microsoft pivoted there. Google, Facebook, whether you like it or not, built their business on the open protocol one. They was like, we're going to create our own version of it. Or we're going to create our own version of blockchain. Same shit, right? It's all bullshit. I'm telling you. Bitcoin only. I know that doesn't make everybody happy, but I've lived this before. I'm telling you, I'm going to come back and I'm going to say, I told you, I'm not above that. I just want to let you guys know, I will be back to say, I told you so. I'm going to say, I told you so much. You're going to get so sick and tired of me saying it. You'll be like, Oliver, please. I'm petty like that. I'm going to come back and say it. I'll do it. I will do it. All right. There was something I wanted to address here. See here. People are talking about a liquidity trap inside BTC and the ETF? What are they talking about? I haven't really heard that before, but maybe it's touching upon what I feel is going to happen, that once Bitcoin gets sucked into this spot Bitcoin ETF ecosystem, that it's not going to be easy. It's not going to be so readily and so easily released again. You're going to keep it trapped, which, you know, for self-custody Bitcoin holders, that's not really a negative or anything like that. But I want you to think about what the incentives are for the spot Bitcoin ETFs. The incentive is for you not to self-custody, not to have your own freedom, to have them own the freedom, but to allow you to hitch a ride. So it's sort of like the spot Bitcoin ETFs are sort of like, we own the Ferrari, right? But we'll let you get in and hitch a ride. But we have the keys to the Ferrari. Now, it's not yours, but you can ride with us, right? You can ride with us. You're in the passenger seat, but you will get out one day of my car. I will stay with the car. You will get out without the car. So think about what your exit is in a spot Bitcoin ETFs. It's back to US dollars, right? Your exit is back to the pavement, boy. Hit the road, Jack. Oh, you thought you were escaping the road? Oh, that was just temporary. You just hitched a ride with me. But one day that door is going to open and you're going to hit the road, Jack, again. You're going to be right back to US dollars. Whereas in self-custody, you don't have to leave anything. You're in the Ferrari. And if you want to leave, fine, but you don't have to leave. Do you understand? It's a big difference here. I'm not saying that there aren't benefits to it. There's some benefits. I'm just saying you got to know the difference here. And don't fall for this. I'll hold your freedom for you. I'll hold the keys to your house for you. And I'll let you in the house whenever you want to come in the house. I'll let you leave your house when you want to leave it. But I'm managing the keys to the house. Imagine living like that. Right? Where you can come and go, but still I have the keys to your house. Like, no, man, it's not me, baby. All right, you want a little bit, fine. You want the bells and whistles a little bit, but not me. I'm not falling for that. All right, not falling for that. But liquidity trap is potentially, in my opinion, the Bitcoin goes into that spot Bitcoin ETF ecosystem, and when you sell the shares of a spot Bitcoin ETF, the shares disappear. So the shares go away and they've got 1 day to make the Bitcoin go away. So it's T+1 settlement, right? So they got 1 day to actually make. So when money comes in, shares are created. They've got 1 day to bring the corresponding Bitcoin into the ETF to match the shares. So there's a 1 day lag. There's a lot of games played with that 1 day lag, but that's fine. All right. So shares come in, money comes in, shares create, your account's credited. They got 1 day to make sure Bitcoin shows up to match the shares. All right. Now you want to sell out, shares disappear. They got 1 day to make the Bitcoin disappear. But where will the Bitcoin go? It's not going back to the street. I don't think so. It's not going back for all of the other world's ETFs to take and never let go. They're not going to let it go, guys. It's disappearing. And the incentive is to get you to just deal with the shares, so that they can just keep the actual thing that becomes the most valuable thing on earth. All right. So it potentially is this kind of liquidity trap, or yeah, it's the supply trap. I'm not sure if that's what people are referring to when they say that, but that's just the first thing to sort of come to mind here. Not as sophisticated. Many people are not as sophisticated as you, Oliver, but they are blind and they don't know that. I'm not. Look, guys, in reality, we have been indoctrinated to, we have been taught that the purpose of our lives are to wake up every day and work for someone else's money. And we have been indoctrinated to believe that that is our purpose on life. That another man created a coupon and says that, listen, as long as you live here, this is the coupon, my coupon, that you work for. It is with this coupon that you exchange things to live and exist. Now go, wake up, go to work, and you work for my coupon. I will control the supply of this. I will control the price. I can make the price of this go up. I can make the price of this go down at will. I control it, but you work for it. Now, we've been taught that this is good, that this, we go to school to make work, to get educated to make more of this other man's coupon, right? Slave money. This other man does not have to work for it. He can create more, make some of it disappear, make the price go up, make the price go down. But what this man, and I'm going to personify the powers that be, what this man that controls this coupon does is says, I'm going to make it go down on you every year. So I'm going to make you have to work for it. I'm going to force you to work for it. As long as you are on my plantation, my land, you're going to work for this. And I'm going to make sure that every year it goes down by a minimum of 2%. That's what a 2% inflation mandate is by the Fed. 2% inflation means your money goes the opposite way. So if inflation is 2% every year, your money drops in value by 2% every year. So the man says, I'm going to make sure that every year you get poorer by 2%. Now we know the number's more, but the stated theft is 2%. 2% a year, which means that you will have to work harder by 2% every year of your life until you die to get the same thing. So I've always used the example, the groceries you bought last year, you'll have to work 2% to buy the same groceries for your family this year. In the next year, you'll have to work 2% more than that year to buy the same groceries every year. To feed your family will get harder every year of your life until you die. We've been taught and indoctrinated to believe that that is good. That's the way. And Bitcoin frees us from that, where we don't work for any man's money anymore. It's ours. Those keys means it's your money. It is not controlled by any human being on earth. You control it. It is not influenced by any human being on earth. You control it. You influence your money. You do with whatever you want with your money. And for the first time, we have a money that goes the opposite way. It doesn't go down in value. It goes up in value every 4 years of your life. It makes your life better every 4 years, where the the coupon, and every country has their coupon. In the United States, their coupon is the dollar. In Australia, the coupon is the Australian dollar. In Argentina, the coupon is the Argentinian peso. So every country is like a slave plantation that has created their own coupon for all the slaves on that piece of property. You must work for this. You have no choice. You don't get a chance to choose your money. You don't choose what you work for. It's where you're born. That's slavery. And so a lot of people don't understand when I say Bitcoin is freedom. That's what I mean by it's freedom. It's freedom from working for another man's money. That who is that other man to be able to control the money I have to give my life for? Why? What's so special about, why can't I control it? Why do I have to work for a money that another man controls and can move the price up and down? And why do I have to work for a money that goes down in value every single year? Why? Why can't I choose? Why is it by force just because I'm born on this piece of property, this piece of land? And Bitcoin now pops up on everybody's land and says, now you have a choice. And so now we can take a little portion of that fake coupon slave-like money that we're coerced to work for. We take a little portion and flip it into freedom. Not right away, but if we keep doing it, take a little portion, put it there. Take a little portion of the fake money and convert it to the real. Fake to the real, fake to the real, weak to the strong, weak to the strong. If we do that long enough, it gets to a point where freedom says, I'm big enough now. It's time to leave. I'm saving you. And it lifts you out of that whole system and you're gone forever, never to return. That is, Bitcoin is freedom. It ultimately overtakes the whole thing and lifts you out of that slave system. And you got to give it 4 years to do that. You got to stick with it for 4 years, 4 years to 8 years. You got to do it. It'll free you. You understand what I'm saying? That's the method. That's the hack. That's the escape. That's the escape hatch. All right. Today, Bitcoin is property. It is a store of value, which is more of a property. It is a burgeoning currency. It will ultimately morph into a currency, into a medium of exchange, and ultimately a unit of account. It must go through these phases. We don't want to rush this. We need it to stay a store of value for a long time because that's the biggest number go up phase of a money's evolutionary process, right? It needs to spend an inordinate amount of time as property, as a store of value. And everybody wants to rush. Well, how do I use it? You're rushing it. But what stores accept it? You're rushing it. Right? Nobody's walking around saying, I own this building here. Who's accepting my building for milk and eggs? It's a property. Like, it needs to stay as a property. It needs to stay as a store of value until half of 1% have it as a store of value, 1%, 5%, 10%. It has to get to a place where everybody you pass on a busy street, you can be almost guaranteed every person I just passed has Bitcoin. Then it can start to become a medium of exchange, which can start its transition into a currency. It has the traits of all of that, but it needs to go through that evolutionary process first. as a store of value. And the beautiful thing about store of value is that it is the period of a money's evolutionary process, right? It's the biggest money go up part of the four stages: collectible, store of value, medium of exchange, unit of account. The store of value is where the wealth is made. We don't want to rush the wealth generating part of those four parts of the evolutionary cycle. Don't rush store of value. Don't rush. Well, I want to use it. I want to spend it. I want to put gas in my car with Satoshis. Don't rush that. That's a shitcoin world. They're trying to cheat the system by skipping over the four steps that a money needs to go through to be truly sound money. It has to go through all four. And we're at the store of value stage. We've left the collectible stage. That's when it was cutesy. You know, a collectible is cutesy. It's for a very niche group of people. Oh, I'm a libertarian. I like Bitcoin. Da, 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 da. Oh, I'm a computer geek. I like this. So this is internet money. Da, da, da. That was the collectible phase, right? It was computer geeks and cypherpunks and a few libertarians over there. It was a collectible. It was cutesy. It was internet money. Da, da, da. Now you've got freaking BlackRock in it. It's not a collectible anymore. It's a freaking legitimate, global, permissionless store of value that is rising faster than anything else human beings have ever come in contact with is rising. So now it's legitimate store of value. And let's sit here and let's milk this most advantageous phase of it now. Milk it by sitting. The money, your future is in the sitting now. It is not in the freaking trading and not in the spending, not in the going to coffee shops. I don't care if you want to spend a few Satoshis on stuff like that to support a business that accepts Bitcoin. I get it. That's fine. I do that too. But I'm talking about your massive part. You don't want that moving. You want that sitting. And this will become the badge of your honor. Your keys are simply your 12 to 24 words. And for the first time in the history of the world, your word truly is your bond. You remember that saying? My word is my bond. You can count on my word. That used to be a saying. Well, now it's not a freaking saying, is it? My word is my bond. My word is my wealth. My word is my value. My word is my Bitcoin. For the first time, your words mean something. For the first time, your word is everything. And that raises the human race. My word. And how can your words be stolen, confiscated? If I give you the word hope and say, I want you to think about the word hope. Now, you have that word in your mind, right? Right now, you're thinking the word hope, right? How can someone steal that? Right now. Can I steal that word from you? Never. I can't touch it. Where do I go to steal it? Where is it? That's what Bitcoin is. How do you steal someone's word? If you jail that person, their words with them still. Like, how do you steal it? How do you take it? You can't. Very powerful, guys. It's very powerful. When will we know that its value would have settled and stabilized? I don't know what you mean. I think you're saying, when will Bitcoin's value stabilize? Well, I don't believe that Bitcoin's value gets to a place where it just stays static. In one sense, Bitcoin's value is static because one Bitcoin is one Bitcoin. I don't find that very useful today because we're still measuring based on all the other existing choices: the US dollar, the Japanese yen, the European euro. These are choices now, and we are measuring Bitcoin against these choices, or these choices against Bitcoin, depending upon your perspective, right? So it's not very useful to say to most people today that one Bitcoin is one Bitcoin, even though it's true. But when all fiat currencies or these other choices die, then Bitcoin, one Bitcoin is really one Bitcoin. I believe that the state of somewhat of stabilization is when there is no other choice but Bitcoin. And so at that particular point, you will not be able to buy Bitcoin. It'll be used to exchange value. All right. So you do this now with your unit of account. You exchange value for dollars. Well, now replace the dollar with Bitcoin. You're going to exchange value for Bitcoin. And someone had better come to you correctly. You see, I'm going to probably end on this point. I want you to get this. This is very important. There will come a day in your lifetime. Do you understand me? Your lifetime. This is not 80 years down the line. Your lifetime, you will not be able to buy Bitcoin. Your lifetime. You will not be able to give someone government printed bullshit money for the most valuable thing on earth. No one's going to accept it. No one's going to accept what is going down in value for the most valuable thing on planet Earth that's going up in value. They're not going to do it. I won't take your dollars for my Bitcoin, and that's today. You think I'm going to be the last one? Tomorrow, someone else is going to reach the conclusion, I will never accept government paper for this thing that's mathematically designed to go up in value every 4 years of my life. I'm not doing it. This is guaranteed to go down every 4 years of my life, and this is guaranteed to go up every 4 years of my life. And you want me to exchange this one, the one that's going down, for the one that's going up? I'm not going to do it. I'm not the only one in the world that will not accept your shitty pieces of paper for my Bitcoin. And Oliver Velez's are being born every hour of the day. It's only increasing. The number of people are increasing. Some of you won't give up your Bitcoin for a piece of paper anymore. You'll exchange the piece of paper to someone else who's stupid enough to give their Bitcoin up for that shitty piece of paper, but you won't do it. We're increasing by numbers every day, and there's going to become a point where no one is. Now think about this. At 145,000 Bitcoin, that's a bunt. Remember that price? 140,000 is a bunt. Please understand this. Let me get this out of the way. 140,000 is a bunt from here for Bitcoin. That's in the bag. At 145,000, 150,000, Bitcoin becomes the most valuable asset on planet Earth outside of gold. At 700,000 plus, Bitcoin becomes the most valuable item on Earth, including gold. Now, what do you sell the most valuable, globally accepted thing in the world for? What do you sell it for? The 25th most valuable thing? You think that's a good exchange? What do you sell the most valuable thing on earth for? Do you sell it to go back to the thing that's declining? by 2 to 12% every single year of your life? Is that what you do? You don't. You don't sell it. You'll borrow against it. You'll post it as collateral. You'll trade for something you think is just as important to you right now, but you will not go back to a dollar. You will not go back to a piece of paper. This is going to increasingly become less of a desire on the part of people as they begin to understand, right? And so you're not going to be able to buy. You're only going to be able to work for it. So how will people get Bitcoin? You're going to have to find a Bitcoiner, and you better find a way to give that Bitcoiner something so valuable, so special, so sublime that they're willing to give up the most valuable thing on earth for. And if you can't come to a Bitcoiner that correctly, you will not get your hands on Bitcoin. So it is going to raise the productivity of the entire planet Earth, because if you can't steal it, you're going to have to work for it. If you can't steal words, you're going to have to work for it. And you're going to have to come to Bitcoiners. If you're a Bitcoiner, people are going to have to come to you with their best. People are going to have to come to you with things that are so special, services that are so amazing. They're going to have to come to you with miracles for you to say, you know what? Give up a little bit of my Bitcoin for that. They're going to have to work for you. Not as spot Bitcoin ETF holders, as real Bitcoiners, holders of Bitcoin. The world is going to have to work for you in order to get Bitcoin. But they're never going to be able to buy it from you. Will you take my government money? Pfft, no. What else you got? I like that mansion you have on the hill. We can negotiate for that. But that piece of paper? Pfft, never. You know, they're going to have to come with something so amazing that you're willing to give up all the future gains that it's almost guaranteed to give you for that item. It's got to be that special for you. So people are going to have to go to the drawing board and find a way to become more valuable. Their services are going to have to become more special. Their products are going to have to become more amazing. It's the only way they'll be able to get their hands on Bitcoin. Bitcoin's going to raise the bar. Bitcoin's going to raise the world's productivity. It is going to raise the quality of work put out by human beings, because you either come correct or you die. Survival of the fittest. You either deliver value or you don't get your hands on what is required to live and survive. Survival of the fittest. And the people with the most, you still have the ability to transfer shitty pieces of paper for Bitcoin. Take advantage of that, because that is going to go away in your lifetime. It's very powerful when you see it that way. Very, very powerful. When do I see Bitcoin lending options returning to exchanges or coming to? Well, that's happening now. You'll be able to, guys, look, I keep saying I'm going to end on this. I'll end on this. It's natural that most of us are still speaking and thinking from a system that we've only known, and Bitcoin is outside of that system. So we're still thinking about interest. Guys, interest is a scam of the old system. Do you realize this, right? Do you realize that interest is a scam? It is a scam that has been placated on the masses for a long time. Do you understand? So the scam, how interest is a scam is, it has been a trick to have you give up your wealth and placed in the possession of another man. Do you understand? So let me tell you how this works. Give me your $1 million now. I will give you a piece of paper. I have the $1 million. I will give you a piece of paper. With this piece of paper, you'll earn 6% a year on your $1 million. Now think about this. Think about explaining this to some alien from a different planet. And the alien saying, wait a minute, let me get this straight. You hand someone $1 million and they give you a piece of paper. They have the $1 million. And they can use the $1 million how they want to right now. And you have the piece of paper. And this paper gives you the right to earn 6% of that $1 million. So you've handed over $1 million to someone else, and in return, every year you're going to get this minuscule fraction of that back. Can you imagine the alien saying, but how does that make sense? How does it make sense that you give away your value? They have the value now. And in exchange for that, they throw you a little tiny piece called interest. And so you say, but it's mine, but you don't have it. But it's mine anyway, but you don't have it. Possession is 9/10 of the law. They have it. Yeah, but I have the piece of paper, but the piece of paper is not that. Yeah, but the piece of paper gives me rights to it. But when? 5 years from now. Really? It's a scam. Give me your value and I will give you a tiny portion of it while I do whatever with the value I want to do with it. Now, it's a scam to take possession of what you have. We don't need interest on an asset that goes up on average 213% a year. Interest for what? You're majoring in the minor. We don't need interest on that. Now, with that being said, all right, Bitcoin is the apex, is the most pristine asset on planet Earth and becoming more and more pristine. And in that sense, Bitcoin can be posted as collateral, but you want to post it as collateral in a non-rehypothecated way, which means that it can't be used by anyone else, that it can sit there as collateral and no one has the ability to move it, but it's there as security. I want to buy this $5 million mansion. All right. I'll post $2 million in Bitcoin as collateral. You give me the mansion, the Bitcoin stays there. We both can view it. No one can touch it, but we can view it. It doesn't move. You have no access to use it. It's there as protection in case I renege on my obligation to pay the rest. Now, in that fashion, Bitcoin's going to be used all over the world. Banks now are gaining the ability to hold Bitcoin as collateral just for that. There are going to be layers built on Bitcoin as collateral. In addition to that, those of you who have self-custody of your Bitcoin, you're going to be able to be your own banks. So someone else wants to buy a home but doesn't have enough Bitcoin, you can post portion of your Bitcoin and earn a spread on their entire real estate deal for the life of the real estate deal because you posted a portion of your Bitcoin to satisfy. So you can start to become your own bank, lend out your Bitcoin, but in a way where no one can touch it or move it. Time lock Bitcoin is going to be the way this is done. You want to do a deep dive into that. Do a deep dive into time lock Bitcoin, where if you time lock it, no one can touch it during that specific time. So you time lock the Bitcoin for the duration of the loan or whatever. You can't even touch it. No one can touch it during that time, but it's sitting there as legitimate collateral. And the problem that collateral had in the past is that you had to hand it over to someone else. This collateral, you don't have to hand over to anyone else. And it is the most secure collateral in the world because it can be verified. It can't be stolen. It can't be confiscated. And yeah, it's verifiable in an undeniable way. So, you know, some people have posted real estate and the real estate has a lien on it that no one knew about, or the real estate they posted as collateral burns down, you know, or gets vandalized, you know, or breaks down or whatever. None of that exists with Bitcoin, you know, and Bitcoin is everywhere in the world at the same time. It's ubiquitous, it's universal, it's everywhere. It's digital, it's words, right? The word hope is everywhere. You know, can't say that nobody has access to the word in China. That word, HOPE, no one has access. Only in this country do they have access to the word hope. No, hope, the word hope, HOPE, is everywhere on planet Earth at the same time. So Bitcoin is everywhere. And so it's very powerful. What's coming, guys, we can't even really truly imagine what's coming and what's going to be built on top of the rails. Just same way in 1995, who could imagine the ways in which the internet was going to be used, the ways in which it was going to affect and radically change our lives? We couldn't see all the ways in 1995, right? Couldn't even imagine. We're in 1995 in Bitcoin terms. We can't possibly see all the ways that this is going to affect and change our lives. But I will tell you one thing. If we could go back to 1995 and we could own a piece of the internet, wouldn't you do it? I mean, the internet gave birth to trillion-dollar organizations. The internet radically changed the entire world. It affected virtually every single human being on planet Earth. If you go back to 1995 and it was for sale, wouldn't you own a piece of the thing that built trillion-dollar companies that changed the world? Of course you would. Well, here's your opportunity, buddy, because Bitcoin is the internet of money. And if you thought the internet of information and if you thought the internet of information and knowledge was powerful and changed the world, the internet of money is way bigger than that. And for the first time, we can own a protocol. Do you realize that humans have never been able to own a protocol ever? We've never been able to own a protocol. We've been able to own the things on top of a protocol or the things that tie their business into a protocol, but we've never been able to actually own the real estate that they plug into, the ground that they build their businesses on. We've never been able to own the ground. We've been able to own a condo in a building built on the ground, but we've never been able to own the ground itself, the base layer of value. For the first time, human beings can stake their claim in the protocol. Do you understand? Never had this opportunity. And you want to sell this thing. You want to sell this thing. You want to get rid of it. You want to flip it back into the thing that goes down every second of your life in value. That's insane. It's a fundamental misunderstanding of money and a fundamental misunderstanding of what Bitcoin is. Bitcoin is designed to do the opposite of what your fake money does. Your fake money goes down in value. It's guaranteed to be lower 4 years from now than it is today. And that is why Bitcoin is guaranteed to be higher in value 4 years from today. It is literally the opposite, like a seesaw. You can't push the dollar down without pushing Bitcoin up. Do you understand? And since the dollar can only go down forever, Bitcoin can only go up forever. It's the opposite end of the seesaw. You can't detach it. So every single time they press print and another dollar comes into existence, Bitcoin goes up in value. Every time the debt goes up, Bitcoin goes up in value. Debt is printed money. You see, there's $100 trillion in debt, new debt, every 100 days now. You can't create more debt, which is creating more money, without creating more value in Bitcoin. It's literally the opposite. So some people say, well, Oliver, what if the dollar starts going up? Bitcoin goes down. The dollar can't go up. Never. I know you can look at the chart of the dollar. The chart is a lie. The chart is just showing you the dollar outperforming the other shitty other currencies, but it's not going up. They're all going down. It's just that the dollar's going down slower. So the chart paints that as it going up, but it's not going up. Dollars can't go up because they're printed every second of your life, and every new dollar makes all the existing other dollars go down. So the value of your dollar is constantly dropping in purchasing power, which means the value of your Bitcoin is constantly rising in purchasing power. It's literally the opposite. When you understand this, you will never go back from Bitcoin back to the declining thing, ever. You'll never go to the other side of the seesaw. Oh, I want the side that's going down again. You'll never want to go back there. Once you have found the side that goes up every 4 years and you really understand that, you will never go back to the side that goes down forever. Never. It's a fundamental misunderstanding of money, and it's a fundamental misunderstanding that Bitcoin is designed to be the opposite. So I end with this. Every single time there's a new dollar, Bitcoin goes up in value. Every time there's more debt, Bitcoin goes up in value. Every time they lie to you, Bitcoin goes up in value. Every time there's fraud, Bitcoin goes up in value. Bitcoin is designed to be the opposite of every flaw in the system. Every flaw, every error, every malintentioned act, Bitcoin goes the opposite way. Every time they debase you, Bitcoin goes up. Every time they print, Bitcoin goes up. Every time there's more debt, Bitcoin goes up. Every time they lie, Bitcoin goes up. Every time they steal from you, Bitcoin goes up. Every time they defraud you, Bitcoin goes up. It is the opposite of their wrongdoing. And this is your escape from their wrongdoing. And this is your freedom. All right, guys. Ciao for now. Boom. Boom. All right. Stack harder. 68. All right. It's on sale. Ciao, guys.